gold, Bitcoin has been rising. There's now a substitution into Bitcoin. And we think that is going to continue now that there is a much easier way, less friction-filled way to access Bitcoin. And you can check out in our big ideas what we think the impact of institutional participation in this market is going to be on Bitcoin's price.
Since her Florida-based ARK Invest bought $100,000 worth of Bitcoin in 2014, founder, CEO, and COO Cathie Wood has supported Bitcoin. As the world's economies and governments suffer, Cathie prefers Bitcoin to gold, a safe investment. Cathie thinks Bitcoin is rewriting the 5,000-year-old story that investors seek precious metals in trouble. March and April 2023 saw investors rethink their plans after last year's U.S. financial sector collapse caused panic. Bitcoin increased 50% from $20,000 to $30,000. Gold climbed 11% during the same period. Cathie thinks last year's steep drop in the regional bank index was a calamity. The indicator plummeted from about 60 in late February to 44 2 weeks later. With the bank term funding arrangement expiring next month, the index is acting up again. Sales lowest since 11/30/2023. ARK Vests unveiled Big Ideas 2024. Cathie expects Bitcoin's problem will grow after 2023. Bitcoin ETFs simplify access to top cryptos. Cathie also expects short-term success. Cathie also anticipates short-term success. By 2030, Cathie expects 5 disruptive innovation platforms to boost equities market valuation from $19 trillion to $200 trillion. These excerpts from Cathie's newest show cover her team's study and early opportunity taking. Please watch, share, and like this video. Follow the channel and enable post alerts for more videos like this.
Chart again, remarkable. The correlation especially since 0809, many people would say, of course, the correlation's there at 0% interest rates. But the metals to gold ratio has correlated very highly with the 10-year Treasury bond yield. And so when the purchasing power of gold has gone down relative to metals, the purple line goes up, interest rates go up. When the purchasing power of gold goes up relative to metals, the purple line goes down and interest rates have followed it until the Fed started tightening. This relationship broke down in early 22. The ratio has been falling, or the purchasing power of gold relative to metals has been increasing, and that's very often in a risk-off environment, as long-term Treasury yields have been rising, or as they are right now, elevated relative to this ratio. If you were just looking at this ratio and nothing else, you'd say, well, long-term interest rates should be closer to 2% than they are today, to 4%. So continue to be struck by that chart. I'm going to show the Bitcoin to gold ratio. Many people call Bitcoin digital gold. We would put it in that category, a store of value, a risk-off asset. And last year, during the regional bank crisis in March, Bitcoin shot up 40% as the KRE, the regional bank index, was imploding. And here again, the regional bank index is acting up. And after a little bit of a correction, after 11 ETFs were introduced, we are seeing Bitcoin catch a bid again. So this idea that it's a flight to quality or a flight to safety is reasserting itself here. The reason we believe Bitcoin went down after the ETFs were introduced is because there was a lot of anticipatory buying before Bitcoin or the ETFs came out. There was a bit of the sell on the news. These are the trading types who just are very opportunistic in that way. As you know, or if you've been listening to In the Know, 15 million of the 19.5 million Bitcoin outstanding are in what we call strong hands. They haven't moved their Bitcoin in more than 155 days. And this chart just shows you that even relative to gold, Bitcoin has been rising. There's now a substitution into Bitcoin. And we think that is going to continue now that there is a much easier way, less friction-filled way to access Bitcoin. And you can check out in our big ideas what we think the impact of institutional participation in this market is going to be on Bitcoin's price.
Cathie is so sure about these 5 innovation platforms: artificial intelligence, blockchain technology, robotics, genomic sequencing, and energy storage, that she thinks their rapid growth and coming together will forever change the course of the global economy. It will be like how the telephone, electricity, and internal combustion engine changed the course of the global economy in the early 1900s, but on a much larger scale. While these 3 platforms increased real GDP growth 5 times, Cathie thinks these 5 platforms will do much better. Experts say that growth will slow from the average 3% we've had over the past century to a range of 2.6%. Based on Cathie's research, the estimate has an amazing growth rate of 88.5%, even in the most bearish scenario. This rise will see these platforms take a bigger share of the global equity market cap, which will rise from $199 trillion today to over $220 trillion in 6 years. Cathie also thinks that this huge growth will have a big impact on the prices of Bitcoin and Ethereum. In the long run, she thinks that both crypto assets will be worth $1.5 million and $28,000 respectively. Let's go back to the video.
We usually talk about this. I showed this last month. But you can see M2 growth year over year is still negative. Again, we haven't been here since the 1930s. And this is another deflationary force at work, we believe. What's interesting about this negative number now is that it's against a flat to negative number last year. And so this is now, we're entering the second year. And I think that's very significant, especially now you're hearing about the regional bank crisis again. There's another shock to the system. More and more analysts are doing the work to figure out, which companies are at risk here as defaults proliferate. And that's a big problem. Deposits continue to leave the banking system. And that's not healthy. That's not healthy. So very important consideration as we think about inflation coming down. Using this very rough correlation, you can see inflation will come down into negative territory if we are right. And we just gave you some very good examples of collapsing prices. Next chart, here's the Fed funds rate, which is what the Fed controls in the green, and the CPI rate. And so you see the Fed took its time before lifting rates as inflation was taking off because they thought it was transitory. And many are people saying are saying they made a terrible mistake. We don't agree with that. We do think the rise in inflation was the function of not monetary policy, but a massive supply shock to the system called COVID, and 2 wars now. So we believe that the inflation rate will go negative. So you can see the 0 line there, which means that if the Fed funds rate stays at this level, and on this next chart, we're doing a ratio of those two, you'll see what's happened already, just soaring after deep negative, that was COVID, real interest rates. And this is what the markets really do respond to. Real interest rates have moved up sharply. They're above I would say they're certainly above the average since 1990. They may be right in line with the average going all the way back here. But if we're right, and the price, the price indices turn negative on a year-over-year basis, then we're talking about north of 5%, and we've only been there during the early 80s. And remember, back then, inflation was 15%. Inflation expectations were very high. Inflation expectations, we just got the University of Michigan report today, 2.9%. Back then, they were in the high single digits. So if we believe that prices are falling, this will go to 5 to 7.5% within the next year if the Fed does not change its spots. And Chairman Powell this week came out and basically said, March is probably not a cut. So we'll have another few inflation readings. And some people believe that CPI will be stuck here for a while. It may be, I don't know, there are lags in the CPI. It's quite the lagging indicator. But I'll show you in a moment a chart that says watch out below in terms of those prices. And maybe the price indices are going to drop by much more than anyone now expects on a year-over-year basis.
Cathie is less bullish on the big picture. Cathie thinks the U.S. economy might be in for a tougher time than thought. If this happened, Americans would have a moderate to serious recession, more bankruptcies, job losses, and tough times. She thinks that another disaster in the regional banking sector could make things worse. Recent news sources say that things are getting worse for regional banks in the U.S. About 80% of the $2.7 trillion in commercial real estate loans held by U.S. banks are held by smaller, not too big to fail regional banks. A lot of that debt is about to mature at a time when interest rates are high and property values are low. This will make it very hard for regional banks to collect on those loans. For example, New York Community Bank Corp reported a $252 million loss in the last quarter, compared to a $172 million profit in the same period in 2022. The company also said it lost $552 million on loans, which is a big jump from the $62 million it said it lost in the previous quarter. This could easily turn into another banking disaster, which would be good for Bitcoin prices right away. What do you think about Cathie Wood's study of Bitcoin, the U.S. economy, and new technologies that change things? Please share your thoughts and comments in the area below, and don't forget to subscribe to the channel. Make posts alert you and give this video a thumbs up if you want to see more.